Hello traders, ever watched a strong trend suddenly fizzle out and thought, how did I miss that? In this video, we are diving into pure price action clues for spotting trend endings. No lagging indicator needed. This isn't theory, it's real, actionable stuff for beginners and pros alike. We'll cover the basics of what a trend is, the price patterns and candlestick signals that shout reversal incoming, and even a real chart example to tie it all together. By the end, you will know exactly when to start protecting your profits or even reverse your position. Ready? Make sure to subscribe and hit the bell to catch all our Forex tips and join our community on Telegram for extra charts and alerts. First thing first, what is a trend? You may have heard this phrase, the trend is your friend. A trend is simply the general direction that price is moving over time. In Forex, an uptrend means price is making higher highs and higher lows, while a downtrend means lower lows and lower highs. Picture a staircase. In an uptrend, each step, swing high, is higher than the last, and trough, swing low, is also higher than before. In an uptrend, watch for consecutive higher highs and higher lows. In a downtrend, look for lower lows and lower highs. Whenever price fails to make a new high in an uptrend or a new low in a downtrend, that's your first hint that the trend might be weakening. For example, if after a string of higher highs and higher lows, price suddenly makes a lower low instead of a new higher high, the uptrend is broken. Do you see why that signals trouble for bulls? Remember, price action defines the trend, not indicators. We base everything on raw price moves. By the end of this session, you should be able to point to any chart and say that is an uptrend or a downtrend just by its swings. Next up, the clues that an established trend is about to end. Signs a trend is ending. Once you know what a trend looks like, the big question is how to spot its demise. Here are the most powerful price action signals that a trend is winding down. First one is broken market structure. In an uptrend, if price starts making higher highs and instead breaks below the last swing low, that break of structure signals the uptrend is over. Likewise, in a downtrend, a break above the recent swing high is a warning. Trend line breaks. Draw a trend line along the lows in an uptrend or the highs in a downtrend. A close below that trend line after multiple touches is a classic clue of a reversal. Pro tip: wait for a daily candle close beyond the line to avoid false breakout. A price that drops below a trend line is often used by traders as signals of a reversal in a downtrend. Reversal chart patterns. These are multi-bar formations where momentum visibly slows. Common reversal patterns include head and shoulders, H&S, three peaks with the middle head highest. This is a bearish reversal after an uptrend. Price will break its neckline, that's a support line under the shoulders, often retraces to that line, then tumble down. Double top, double bottom, an M shape at the top, bearish, or W at the bottom, bullish. A double top suggests the uptrend is exhausted and a break below the midpoint, the valley, confirms it. Double patterns are textbook signs that bulls or bears have run out of steam. Next is rising and falling wedges. A rising wedge slants up and contracts. It's bearish, often appearing at tops. A falling wedge slants down and contracts. It's bullish, often marking a final low. Both reflect tiring momentum in a prevailing trend. Candlestick reversals. Certain candle patterns can flag exhaustion. For instance, a bearish engulfing candle, a large red candle engulfing the prior green one at the top of an uptrend tells us sellers are taking over. A bearish engulfing tells traders that the market is about to enter a downtrend following a previous increase in prices. Similarly, doji or shooting star candles at key resistance levels hint at a fair rally and possible reversal. Divergence warning. Even though we are price action only, it's worth mentioning. If price makes a higher high but momentum is weaker, like smaller candles sign, it's often a red flag. We won't cite an indicator here, but just notice when price fizzles out at a new peak. Have you ever seen any of these patterns on your chart? Drop a comment with one example. Next, let's see how this looks on a real chart. Let's put theory into practice. Here is the Euro USD chart trading up for weeks. Suddenly, price forms a double top, an M shape with a clear support line, the neckline at its base. According to price action rules, once price breaks below that neckline and retests it, the uptrend is likely over. For example, traders often wait for a neckline retest after a head and shoulders or double tops break. Wait for the price to retest the neckline after its breaking and speculate shorts on the price drop after that. Let's break it down step by step. 1. Identify the prior trend, for example Euro USD making higher highs. 2. Spot the reversal pattern, e.g. double tops or head and shoulder forming. 3. Watch for a decisive break or a close below the swing low or the neckline. 4. Look for a retest of that broken level for confirmation. When all this lines up, the chart example shows price rolling over quickly, signaling the end of an uptrend. Next, I will show you a related mistake that traders often make and how you can avoid it. Mistakes to avoid. When hunting trade ends, even pros slip up. Let's highlight a few traps. Fading too early. One of the biggest mistakes is trying to pick a top or bottom before the market confirms it. Novice often short every little pullback in an uptrend, thinking they will catch the reversal at once. Novice traders will be lured to short each high, but reversals succeed only 20% of the attempts. In other words, don't stand in front of a moving train before clear structure breaks. Ignoring the retest. Jumping in immediately on a trendline break without retest can lead to quick losses if price snaps back. Be patient. Often price will revisit the broken trend line or support level. Only once that retest fails, price can reclaim the level. Is it safer to conclude the old trend is done? over-reliance on a single signal. One bearish candle or one small pattern doesn't guarantee a reversal. Look for confluence. A trendline break plus a reversal chart pattern plus a clear candlestick reversal is much stronger than any one signal alone. Neglecting bigger time frame. A trend may continue on a higher time frames even if your daily 4-hour chart shows a wobble. Always check the higher time frame for context. If the big picture says uptrend intact, be cautious. Be cautious about fully reversing your bias on a smaller swing. Avoid these mistakes and you will stay on the right side of the market. Remember, smart traders wait for confirmation, manage risk, and never get greedy. If you found this valuable, smash that like button and subscribe for more price action lessons. Your engagement helps our community grow. Also jump into our Telegram channel where I post trade ideas and chats. Until next time, keep your chart clean, your mind focused, and trade with confidence. See you in the next one.